And it's 1:30 p.m. right here in Lagos, Nigeria, same time in London. Coming up on the program, World Bank President AJ Banga says the sure path to growth for the African continent is intra-African trade. Kenya opens talks with IMF and World Bank on Eurobond repayments. Plus, oil prices stable as concerns ease about potential supply disruptions. Hello, welcome to the program. I'm Ladi Williams. First off, let's kick off with the markets now, starting on the African continent. We'll see the NGX there firmly in the green, 0.27% up, different from the big drop we got yesterday at the end of trade. South Africa's GSE index up down 0.26%. That's in the red at intraday. Other markets we track, North Africa, EGX 30, up 0.20%. And Kenya closed positive yesterday, up 0.12%. Let's go over to the Middle East now, where markets were mostly positive at intraday. In the UAE, it's all positive sentiment right there. Abu Dhabi index up 0.43%. The Dubai index, 4,090 points, also up 0.96%, almost 1%. Elsewhere in the region, Saudi Arabia down 0.27%. The lone loser at intraday right there in the Middle East, while Qatari index up a massive 1.74% at intraday. But looking out for how these markets close at the end of trade today. Let's take a look at what's happening in London now. We did speak to Juliana earlier today about the Luton Airport fire. Great to have you again, Juliana. Any updates on the fire incident at the airport?
Yeah, good afternoon, Luddy. There has been an update, actually, by Bedfordshire Fire and Rescue Services. They have said that the incident, which they first described as an emergency situation, has actually been downgraded. I do believe the fire is out. And just to update our viewers, there was a huge fire yesterday evening. I believe rescue services were called at about 10 to 9 p.m. because there was a significant blaze at Terminal Car Park 2, which has affected about 1,500 cars. Now, for most airports across the United Kingdom, you can, of course, drive to the airport and you can leave your car in the car park whilst you're on your holiday. Pretty sad for those passengers who are going to be coming back to basically ashes. Now, we know that over 100 firefighters were involved in the blaze. There were lots of pictures doing the rounds on social media. 5 people taken to hospital. Thankfully, no fatalities, although one member of staff was caught up in the fire. Now, how does that affect people? Of course, Luton Airport has been shut. It is quite a busy airport just in the north of London, but outside of the actual capital. At least 70 flights from budget airlines such as EasyJet, Ryanair, and Wizz Air have been suspended. There are, of course, no flights coming into Luton Airport at the moment. Now, fire and rescue services, including bosses at the airport, have said things should be safe from 3 o'clock today. So hopefully from that time, things will be up and running. But of course, there is no magic wand. It's not just going to start up. So they are advising customers to check with their airline before they travel.
Right, countdown to 3 p.m. at this time. But let's look at some fashion news now. See, next, they've lined up about £100 million fat face, the latest high street takeover deal. It's looking quite big, looking like it's going to close soon. What are you hearing about this?
Yeah, that's absolutely right. Next is a very popular high street retailer in the UK. It survived the pandemic, and recently it's been swiping up lots of smaller brands. So Next, if you go on the website, you can find familiar brands like May.com and Cath Kidston, all brands that would have gone into administration if not for Next coming in at the last minute and wiping up all of their intellectual property. That appears to be the case with Fatface, which is another British high street retailer. They have kind of struggled over the past couple of years. It's just so much easier and cheaper for most people to get their outfits online. So if you don't have anything that, stands out with consumers, then you are in trouble. But alas, it does appear at the last minute that Fatface has been rescued by Next for £100 million takeover. Now, this was reported by Sky News, which is a broadcaster here in the UK. Next and Fatface have declined to comment. Next is a FTSE 100 retailer. They have been doing significantly well, but the fact that they haven't commented on this yet means it's just purely speculation. So we'll have to do those famous words. We'll have to wait and see, Laddie, to see if there's going to be an update.
Wait and see. Definitely a developing story. We'll keep tracking that. And talking about the FTSE 100, how are the markets looking in the UK?
Yeah, tip-top shape at intraday. The all-share is up 0.04%. The FTSE 100 up 2 by 0.18%, but the FTSE 250, the domestic market, that's down by nearly 0.5% at 0.42%. In the currencies market, the British pound trading down against the US dollar by 0.01%, though up against the euro by 0.03%, and up against the Japanese yen by 0.03% too, Laddie.
Right, definitely. Markets not looking so bad. Thank you so much, Juliana. All right, let's take a look at what's happening in Europe now. See, Germany's most famous sandal makers going public. We started as a company making orthopedic footwear. Birkenstock sandals and shoes have now become an icon and were featured in the latest Barbie film. The company goes public today on the New York Stock Exchange. For more on this, we're joined by Deutsche Welle's Wada Imran in Berlin. Great to have you. Tell us about Birkenstock and how share prices are looking.
Thanks for having me. Yes, Birkenstock is a really old brand. Its roots go back to 1774 to a man with the same name as the company in a small town in Western Germany. Over the next century, the brand focused on comfortable footwear with insoles designed to cushion the feet. That's basically their brand, comfort footwear. A German-American woman discovered them on a trip home and started importing them to the US in 1966. Just in time for the hippie movement, which gave the brand a lot more limelight. And now, over 200 years since its inception, the company is going public. Initial reports from the Wall Street Journal say the company will be valued north of $8 billion. The IPO is probably going to be priced at $46 a share, but can go higher to $49 a share. Now, until 2021, most of the shares of the company were in the hands of the founding Birkenstock family. But after a private equity group from the US bought a majority stake in the company, the two heirs of the Birkenstock family were worth more than $1 billion each. But the IPO forecasts look quite good for the German company.
Right, and the company has enjoyed affiliation with celebrities. How has this boosted the company's value?
Well, some important names come to mind when talking about how the brand grew internationally. I think it goes back 30 years when British supermodel Kate Moss wore the sandals for a fashion shoot. And back in the day, everything celebrities wore was to be had by the people. And so the shoes became popular. German supermodel Heidi Klum also liked to be photographed with the Birkenstock shoes. And so they became associated with fashion icons, which is a very interesting phenomenon because these sandals aren't going in the Hall of Fame for their beauty, but they have enjoyed fame because of their style. Now, I think another name that also boosted the company's value is Steve Jobs. In November last year, a pair of very worn-out old Birkenstock sandals worn by Jobs himself in his early Apple era went for auction. And they were bought for $218,000 by a bidder. So I think these things really gave the company a very global outlook and consumer market.
All right, let's turn to the markets now. What are European investors keeping an eye on today?
Well, European stocks slipped after fashion giant Louis Vuitton had a disappointing sales number this month, which were lower than expected. Shares of other French luxury brands, Hermès and Kering, fell by more than 2% each. A similar trend is observed for Swiss luxury companies Richemont, which fell 5.3%, and the Swatch Group also dipped. On a more global scale, Asian stock markets rose, and there are positive expectations from China and strong earnings from South Korea. A lot on investors' minds today.
Thank you so much. That was Warda Emran right there in Berlin. Thank you for the update right there from Europe. Let's take it on to Asia now. We see Asia-Pacific markets climb across the board with South Korean stocks leading gains. South Korea's Kospi closed 1.98% higher there, 2,450 points there for the all-share index. The Nikkei closed up to 1.60%, 31,936 points. HSI index is 1.29%. So we're seeing green on the screen there. Shanghai Composite 0.12% up, and S&P ASX 200 7,088 points, 0.68%. See Samsung's third quarter operating profit forecast was slightly higher than analyst expectations, and the Kosdaq there was up about 2.78%. To U.S. markets now, see stock futures rose today as Treasury yields continue to retreat from the 16-year highs reached last week. Investors also cheered a large merger in the energy space. We see futures tied to the Dow Jones Industrial Average. That's up 0.22%, 34,011 points. The S&P 500 futures, that's at 4,402 points, up 0.24%. And the tech-heavy NASDAQ, 15,323 points, up 0.34%. We see ExxonMobil agreed to buy shale driller Pioneer Natural Resources in an all-stock transaction worth $59.5 billion. The largest merger announced on Wall Street this year. Pioneer shares were up about 2% in early trading, and Exxon was down about 1%. And oil prices were little change in early Asian trade today as concerns eased about potential supply disruptions due to the conflict between Israel and Palestinian Islamist group Hamas. Brent crude rose 12 cents at $87.77 a barrel, while U.S. WTI crude was up about 3 cents to $86 a barrel. Brent and WTI surged more than $3.50 on Monday as military clashes raised fears that the conflict could spread beyond Gaza, but settled lower in Tuesday's session. And to the metals market, we see gold prices firmed today as the dollar edged lower after several U.S. Federal Reserve officials suggested that the recent surge in Treasury yields might make further rate hikes less necessary. Spot gold was 0.5% higher at $1,870 per ounce after hitting its highest level since September 29. U.S. gold futures held their ground at $1,883.80. See the dollar dipped to a nearly 2-week low there, a trough against a basket of currencies, tracking a slide in U.S. Treasury yields that have retreated from their 2007 highs scaled last week. Now we'll take a break now. More stories from the African continent. That's in a moment. Do stay with us.
From the predictable
Welcome back. Well, back to updates from Marrakesh now. See, Africa cannot develop by relying on loans from international financial institutions. And this is perspective of the president of World Bank Group, Mr. AJ Banga. Mr. AJ, who was answering questions in his first outing since the IMF World Bank meeting started in Marrakesh, Morocco, believes that the sure path to growth for the continent is intra-African trade. Take a listen.
It is correct that close to half of our volume of lending goes into the African continent. It is also correct that this is after 50 years, I believe, that the annual meetings are being held on the soil of Africa. My belief is that the level of growth of population in Africa over the coming years and the opportunities that Africa represents, therefore, for world growth are second to none. The question really is, how do we surmount the unbelievable challenges that exist on the ground in Africa to enable that to become something more? And that includes everything from very simple things that people outside don't understand, but those of you who live here do. The ability to transport goods across African borders within Africa is unbelievably complicated. It is cheaper to take something from an African country to a completely distant offshore port to bring it back to an African country than it is to move that produce or that product from one African country to the other across their own borders on the continent. That has everything to do with logistics, but also to do with the simplicity of documentation across borders. There's so much work to be done on that. There is the African Free Trade Commission that the bank is an active supporter of. I've said this to African finance ministers. I believe this topic deserves much more attention. You cannot solve it for the continent as a whole, but you can solve it by starting by smaller regions in the continent, looking at how you can promote intra-regional trade in Africa. Just one example, to create jobs for young people. There are other issues to do from the basics of education and healthcare, including skilling institutes as the children grow, so they get a chance to be skilled appropriately for the kind of jobs that could be created in that country.
That's World Bank President there, AJ Banga, there talking about Africa there, and Africa trading with Africa to boost production in the country and get more income and revenue right there. And the IMF has also provided funding of $80 billion to Africa in the past 3 years, and that's according to Abebe Mro Selassie, Africa's Department Director, IMF, who was speaking at one of the regional meetings at the ongoing IMF World Bank meetings in Morocco. Take a listen.
And here there is some tension, between making the money available for, those countries that are most vulnerable and, increasing eligibility to a bigger group of countries. Then you, of course, are going to be helping countries that are most vulnerable a bit less. So there's a given amount of resource, and the question is, who to make it available to. So we're trying to strike a balance in terms of eligibility criteria. If the membership so asks us to change them, of course we will. But again, that tension is what led to the compromise. Second, on the point about IMF support for sub-Saharan African countries, I think more generally for the African continent, the meeting that we're just coming out of, over the last 3 years, since March 2020, when the pandemic broke out, we have provided financing to the tune of $80 billion to the African continent. $80 billion. I think this is many times more the financing that we've provided historically. And second, it came, I think, at the right time, when the region was being shut out of capital markets, when the region did not have any alternative financing, including internally, as revenues collapsed, as economies were shut down. So I think we in terms of stepping up to support the region, I think it's a historic thing that we've done. I'm very proud of it, and of course, going forward also, as long as alternative financing remains scarce, stand ready to support countries.
And conversations of debt cancellation, especially for emerging economies that seem swamped in debt servicing, came up during the meeting of the Managing Director of the International Monetary Fund, Ms. Kristalina Georgieva, and the Central Bank governors. The response of the Managing Director, however, indicates that affected countries may not have relief on this for now, as the fund is yet to recover from its exposure during the outbreak of COVID-19.
During COVID, we had dispersed close to 1 billion. Those from the Cancellation Relief Trust, over 700 million were from Africa. We can do it in the future, but we need to replenish the CCRP first. There is precious little money left. And as we go about PhD subsidy, putting PhD on sustainable building, we could also be looking into how to do CCRP on sustainable building. We don't yet have a position on climate policies in other programs. This is something that is on our priorities to think through. Secondly, we have the second issue I want to address is the surcharges came Vice, very fair point. In the world of very low interest rates, there was not a huge burden. Surcharges did not represent a major burden. And at that time, they were there to insensitize countries to actually pay its back faster and reduce their exposure to the IMF as a result. Now we are in a high interest rate environment. And I'm very pleased that our board of directors has agreed that we should review surcharges. In this context, we put surcharge policy very strong government.
South Africa's population has grown by more than 10 million in the last decade, and that stands at 62 million as of February 2022. The country's Statistician General, Risenga Maluleka, presented the Census 2022 data to President Cyril Ramaphosa at the Union Buildings in Pretoria. Maluleka says Gauteng province is the most populated province in the country at 15.1 million people.
Can say that in 1996 there were 40.6 million, and we grew by 10.4% into 2001, where we were sitting at 44.8 million. In 2001 to 2011, we grew by by 15.5% straight into 51.8 million. And the increase between 2011 and 2022, the increase was 19.8%, which represented 10.3 million persons, and it took us to 62.027 million. Now, we want to look at the provinces, Melo. Let's go into the next slide. Let us look at the provinces. KwaZulu-Natal, as of 1996, was the most populous province. It was followed by Gauteng. 2001, KwaZulu-Natal stayed. In 2011, it was overtaken by Gauteng. As we can see that Gauteng went all the way to 2022, sitting at 15.1 million, followed by KwaZulu-Natal at 12.4 million. But of interest is the Western Cape, which was number 5 in 1996. 2001, the same. It came after KwaZulu-Natal, Gauteng, Eastern Cape, and Limpopo.
We applaud the magnitude of effort that went into compiling Census 2022. We've been told that the enumerators from Stats SA first began their tests in 2018. In the midst of their work, in 2020, COVID-19 pandemic struck, but in the course of all that period, we also had local government elections, which were very disruptive as well. We also had the unrest in our country.
Ramaphosa there, President of South Africa. All right, that's the show today. Remember, you can watch this again on our YouTube channel. Just flip over to YouTube, search for Channels Television, click on videos. You can watch all our production and also get updates on www.channelstv.com. From me and the team right here at Lagos HQ, it's bye for now.